My name is Chris Kuiper. It is my distinct pleasure to welcome you to the first panel of the day from the Bitcoin Policy Institute. Notice I said Bitcoin Policy Institute, not Crypto Policy Institute. So what better way to open this event with this panel titled, What Makes Bitcoin Unique Among Cryptocurrencies? Now, some skeptics among you might be thinking, well, that's really cute. Given all that's gone on over the last year, the bankruptcies, the frauds, the leverage, people losing their life savings, seems like you might be trying to rebrand, pivot back to Bitcoin, and get rid of all this kind of dirty crypto-sounding stuff. I can assure you that's not the case, and we are going to hear from our four distinguished panelists today as to why they are persuaded that Bitcoin is certainly unique and different. And what we mean by that is it's special. It stands out in important ways, and we're going to go through some of those ways of how it's different in some very foundational ways. So since Natalie already introduced everyone, I won't do that again, but just to tell you who everyone is here. Right next to me is Bradley Rettler, and then we have Josh Hendrickson, Craig Warmke, and Andrew Bailey. And just a quick note you might have noticed, I'm Chris Kuiper. I'm going to be the moderator today, so I'm glad to be able to pick these gentlemen's brains. I'm the Director of Research at Fidelity Digital Assets. We serve institutional clients, helping them to buy and custody digital assets. But I'm not here to talk about Bitcoin as an investment. Instead, we're going to go at a much deeper philosophical level. So to do that, let's start out with an overview. What are some of the features we should be looking at when figuring out why Bitcoin is unique? How should we even frame this question to begin with? And Bradley, let's start with you. How do you help your students or readers start thinking about this overall?
I like to say that Bitcoin is special, Bitcoin is unique, because Bitcoin is neutral. So if you take anything away from this panel, that's the main idea, is that Bitcoin is neutral. And what we're going to talk about on this panel for the next 40 minutes or so are all the ways in which Bitcoin's neutrality comes forward. So it begins with the founding, right? We have a pseudonymous founder, Satoshi Nakamoto, who we still don't know who Satoshi is. Satoshi didn't treat themselves any different than anyone else. They announced the invention of Bitcoin, that the network was going to be up and running, and everyone had a chance to participate from the beginning. Satoshi didn't privilege themselves at all. Bitcoin's development is neutral. It is decentralized. It relies on a network of people running nodes on their computers, and they get to determine what software they want to run. Updates are not pushed down from on high, but they're agreed upon by the entire Bitcoin community. And Bitcoin is fair in its distribution in a way that other cryptocurrencies and other currencies are not. And so from the very beginning until the present, we see Bitcoin's neutrality coming forward and distinguishing it from other cryptocurrencies.
It's an excellent overview. So let's get into some of those in more depth now. So let's start with the beginning, the founding. Andrew, I'll give you this one. What about Bitcoin's founding and early years and development make it unique? And then really what lends to that neutrality, that thing that Bradley was pushing on? What lends to its neutrality as compared to all the crypto that has now come after it, thousands or tens of thousands after?
Many of us, when we think about Bitcoin's earliest years, are tempted to pursue the question of who Satoshi is. We really want to know who this guy was, the pseudonymous inventor of Bitcoin. I think a better question to think about, though, is what Satoshi did. To think about the design choices he made in those very early years, and to think about the implications it has for what Bitcoin is now. I want to call your attention to two. The first is that Satoshi designed Bitcoin so that there are no insiders. And let me give you a concrete example of what this means. For some cryptocurrencies and some other currencies, only some people can print new units, can make new units of that currency. So for many crypto projects, an organization, a firm, a foundation, a business prints new tokens out of thin air and then sells them to other people. So they're insiders that make and then outsiders that buy. Satoshi didn't set up Bitcoin this way. There's one and only one way to make new Bitcoins. It's to do computational work, to burn energy. We'll talk about the implications that has in the next panel, this burning energy. But notice that Satoshi didn't make Bitcoins for free and then sell them to other people. In fact, Satoshi bought Bitcoin. He bought Bitcoin, if you like, from nature by using electricity when he was first mining Bitcoin. So what I notice here structurally is that everyone has to play by the same rules. There aren't insiders and outsiders. Instead, there's just one way to make new Bitcoin, and Satoshi himself submitted to those same rules. So that's one example from Bitcoin's earliest days that shows a kind of neutrality where there isn't this dual structure. But there's something else that Satoshi did that's really important to notice. Satoshi left. He left. Imagine a CEO of some important tech firm who stepped down as CEO, but then continued to tweet about the company and continued to announce new products and post blog posts and pump the products and talk about the stock price. This would not leave us with a sense that the CEO was hands-off and that it was a neutral thing that remained. No, it would still be a thing with a leader, a CEO, really, if not in name. Satoshi didn't do that. He left. So some people think of Satoshi's pseudonymity as a kind of weakness or threat to Bitcoin. And I agree. There's something you might want there to be a present CEO, but it's also a strength because it means that what's left behind doesn't have a CEO. There is no Bitcoin official foundation that holds trademarks, that prints new units. There is no Bitcoin CEO. Instead, we have a neutral network that anyone can use.
Yeah, I personally would like to know who Satoshi is, but I don't want everyone to know. Just me personally, right? For my own curiosity. Design. Let's go into some of the things you talked about with design. But now 14 years later, right? So those were some of the foundational design choices that you talked about. But now 14 years later, is Bitcoin still special? Are Bitcoin's proponents right in saying Bitcoin is the most secure and censorship resistant among all the cryptocurrencies? Josh, I'll give this to you first.
So I think when we talk about neutrality, it's kind of important to think what we mean by neutrality. And so what's important when it comes to Bitcoin is that the neutrality comes from decentralization. And so if we're thinking about censorship, what we're really thinking about is centralization. And so prior to Bitcoin, any kind of electronic ledger of balances anywhere out there had a centralizing force, right? I mean, the most common way to think about this is your bank. You have a bank account, that's just some digital ledger managed by the bank. And if you send money to somebody else, the bank is the one that has to update the ledger. If the person you're sending the money to is at a different bank, then that bank also has to update their ledger. And then there's also some settlement authority that's going to have to transfer balances between banks. So in every case, you have some central authority who's kind of determining this. And what Bitcoin did is it decentralized this process. And by decentralizing the process, it created this neutral form of money, and it created this neutral form of money because there's not one single entity that's able to control changes to this electronic ledger. Right? So with Bitcoin, you have this mining process, and so we'll talk about that a little bit later. But I mean, in general, this mining process determines how these transactions get added to this ledger, and who gets to add them is determined essentially by a lottery. And so there's no way to predict who is actually going to process the next block of transactions or add the next block of transactions to the ledger. And this is really important. And it's really important because this means that there's no particular individual, there's no particular entity that you know with certainty is going to add those next transactions to the ledger. And that decentralization creates censorship resistance. It creates neutrality. Why? Because there's nobody that can be pressured to change the ledger. There's nobody who can be forced to change the ledger. There's nobody who can be bribed to change the ledger. And there's no single point of failure, right? Earlier attempts to create like electronic versions of cash suffered because there was some firm that that was in charge of the entire thing. And so if you have that firm in charge of the entire thing, now there's a firm that could be pressured, there's a firm that could be bribed, there's a firm that could be threatened, and also you bear the risk that the firm just decides to shut down. And so with Bitcoin, we don't have to worry about that. And if you think about why should we think that this is an innovation after 14 years, it's because the Bitcoin network is always on.
So picking up on the idea of these miners expending energy to, doing this lottery process, as you mentioned. So they have to expend energy to get these lottery tickets, and if they win the lottery, they get the right to add a block to the blockchain. Why would they do this? Well, they get newly minted Bitcoin, right? So if we think about this supply schedule of newly minted Bitcoin, many people are probably aware here there will only ever be a maximum of 21 million Bitcoin. And we won't actually reach about that level until the year 2140. So probably long after we're all gone, which is pretty incredible to think about, unless we're cryogenically frozen or there's some crazy life-altering technology. But 21 million cap, there's currently 19.3 already out there around there. So the supply is pre-programmed in the code. Now I can see the code, I can verify it, it's open source, so that gives me some comfort. But what about that? What about all of this lends to Bitcoin's status as a neutral sound money? And Josh, you can pick up there, someone else can jump in. And then also, why can't that cap be lifted? Why can't someone just change the rules and decide it's 50 million is the new limit?
So in terms of why it's important, in economics we have something called the Klein problem, and the Klein problem describes this problem that arises when you have private money that gets issued. So it's easy to imagine the sort of problem with just letting anybody print their own money. And that is that, somebody could create their own money. They could generate enough interest in it that people start using it. And then once there are a sufficient number of people who are using it, one day that person who created all that money could just print up a bunch of money without anybody knowing, go out, buy a bunch of assets, buy a bunch of goods, and essentially create a bunch of wealth for themselves, but then everybody else who's holding that private money is now worthless for them. And so so in other words, the Klein problem is to basically say that anytime that you have somebody issuing this private money, there's this chance that at some point they would just engineer this massive wealth transfer to themselves. And so the reason that the Klein problem is kind of stuck around in economics for a long time is that, the only solution to this is that you just have to trust the issuer not to do that. With Bitcoin, you don't have to trust the issuer. So the supply is in the code. So because the supply is in the code, I don't have to worry that one day I'm going to wake up and there's going to be 1 billion Bitcoin. Right? It's already in the code. And in terms of why somebody wouldn't change it, they can't change it, at least not in the way that I just described. So nobody can just wake up one day and just create a bunch more Bitcoin. Now, of course, it's open source software. You can, you could change the supply schedule and you could post the new version up, but nobody has to run that version. And so people have their choice. And the great thing about this is that if you've got this fixed supply, nobody who's running it has an incentive to ever download that version that has a greater supply, because it would dilute the value of the Bitcoin that they already have. And so it solves this Klein problem. So it not only solves the problem of decentralization that I just talked about, but it also solves the Klein problem because it prevents people from engineering massive wealth transfers to themselves.
Yeah. Andrew, you were talking earlier about nodes, how they play into this as well. Can you take us a little bit more technically of what nodes are and how do they play into this idea of capping the supply and enforcing this credibility?
Mining gets a lot of attention, and rightly so. It's important to also notice another player in the network, which is just nodes. That's a fancy word for people who are running Bitcoin themselves. Who can run Bitcoin? I do. Some of you in this room do. Maybe Senator Cruz has a Bitcoin node. I know. I don't know. Anyone can, is the point. This is another way in which Bitcoin is neutral, that anyone can run a node. Now, what does a node do? Well, when you receive a Bitcoin transaction, your computer can check that transaction on various dimensions. It can check that there's a valid digital signature. So that's a little bit of mathematics that proves that someone has the password or the private key to the Bitcoin that's being spent. And your computer can also check that the Bitcoin that's being spent is supposed to exist. You can think of this as a kind of anti-counterfeiting measure. So when somebody's giving you a $100 bill, how do you check that it's real, that it's supposed to exist? Well, you sort of look for the stripe on it and that, yeah, it looks like Ben Franklin. Okay, this is a real bill. And if you're more sophisticated, you might run a marker on it. Well, Bitcoin does something like this, but cryptographically, to check that it's a valid transaction, and then to look against the Bitcoin issuance schedule and to see, yes, there really are supposed to be 19 point something million Bitcoin that exist right now. And if it's a fake Bitcoin, your node will reject it. So we ask, who enforces the Bitcoin rules? It's us. And notice how different this is than other monetary systems that you might be familiar with. Who enforces the rules for anti-counterfeiting rules for physical currency? Well, it's whoever prints the currency. Who enforces anti-counterfeiting rules for bank deposits or claims on central bank money? Well, that would be the trusted parties that are deputized by the central bank to administer those deposit systems. In Bitcoin, who enforces the rules? We do. Anyone can do this. And you can check when you get an incoming transaction that it's valid, that it's real, and that the Bitcoin that you're receiving is real Bitcoin that is supposed to exist. And if it's not, you reject it as fake, and then you don't turn over your goods or services in exchange for that Bitcoin or the fake Bitcoin that's being sent to you. So the enforcement mechanism here, Josh described at a high level the game theory or the incentives, but the mechanism is really quite simple, how it's actually enacted, which is that your computer checks for you, and if it's bogus, then you reject. And anyone can do this.
Yeah, I think that's a great point. There's this beautiful kind of checks and balances that I see with this. With the token holders, they can hold it, but they have no power or say really over the network. There's the miners who get the opportunity to write to the ledger if they do the work. And then there's the nodes that enforce the rules. And like you said, the nodes are often forgotten with a lot of people. They don't think about how this plays into it. It's a beautiful kind of way of checking the power and governance of everything. I have to get a question in here about Ethereum. So Craig, we'll go to you for this one. So Bitcoin has this pre-programmed monetary schedule, and it's currently growing around 1.6, 1.7% a year, about the same rate as gold. And that growth rate gets cut in half every 4 years, but it is still growing, right, to the year 2140, like we mentioned before. Ethereum used to operate like Bitcoin and had a similar issuance schedule, but they actually have changed the rules recently over the last few years. Number one, they issue fewer tokens. And then also now, whenever you do a transaction on the Ethereum network, that native token called Ether is burned. Some of it is burned in that process. So at times, the supply for Ether, it can actually be deflationary. The supply can actually contract or go negative. So this has led to this narrative from some people that, okay, if you want to say Bitcoin is potentially sound money, well, Ether is ultrasound money. Do you agree? Is that the case? Is Ether going to supplant Bitcoin as the more sound money?
So different camps mean different things by calling a monetary asset sound. Economists tend to link monetary soundness with the price stability of the money. So think of the price stability of gold, or among fiat currencies, the US dollar. I think Bitcoin, both Bitcoin and Ethereum proponents mean something different than that, and then different from each other. So Bitcoin proponents, I think they say that Bitcoin is sound, not only because it's a scarce asset, but because it has a predictable and auditable monetary policy, which is really hard to change. Whereas when proponents of Ethereum call Ethereum ultrasound, and so in some sense maybe more sound than Bitcoin, I think they focus exclusively on this scarcity aspect, precisely because of the network upgrades you mentioned, Chris, that it seems in the near future, as long as Ethereum adoption continues apace, the issuance of Ethereum will trend into the negative. And that might happen. I think it maybe is even probable. And so I don't dispute that Ethereum is sound in this sense, and that it might someday even be more scarce than Bitcoin. But even so, Ethereum is not sound in the sense that Bitcoin proponents say that Bitcoin is sound, in the sense that it has a hard-to-change monetary policy. Ethereum's monetary policy is much easier to change. And we know that because it has something like maybe close to a dozen times over the last several years. So, and this stands in stark contrast to Bitcoin, whose monetary policy hasn't changed at all, not even once, since the network launch in January 2009. So I think Bitcoin is special in this way, even though it may not be the most scarce asset in in the world. It's sound in the sense that it has a difficult to change, very difficult to change, maybe nearly impossible to change monetary policy for the reasons that Josh mentioned. It's sound in the sense that it has no founder and no foundation who can more easily change that monetary policy. And this speaks to, again, to Bitcoin's neutrality. There's really no one who has this power.
Bradley, let's get back to you on one of the other things you mentioned at the beginning, which was security. So security, when we think of it, we're talking about security of the Bitcoin network, right? So how does it prevent tampering with or being attacked? And we talked about mining or proof of work. And so if you have this decentralized ledger that nobody owns or controls, you have to have a way to come to an agreement, right? And you need a consensus mechanism. So proof of work is part of that consensus mechanism for Bitcoin. And so when we think about its security, we're talking about one of these things here. A lot of people claim that if Bitcoin changed its consensus mechanism from proof of work to proof of stake, it could use 99% less energy and still retain its security. We'll leave the environmental question to the next panel, which I'm excited to hear, but on a more fundamental level, would you say Bitcoin's proof of work is wasteful?
I think there are 4 problems with the idea that Bitcoin could or should switch to proof of stake as the consensus mechanism. So in proof of work, block rewards go to people who have done a certain amount of computational work, and they prove that by finding an answer that takes a lot of computations probabilistically. In proof of stake, block rewards go to people who have staked some of the asset. So the first problem is that proof of stake is less secure as a consensus mechanism. The reason I believe it's less secure is because it costs less to unsuccessfully attack the network. If you attempt to attack the Bitcoin network, you have to use a lot of energy to do that. You have to do a lot of computations. And if you fail, the energy is gone. You've used it already on something, either you paid for it or you could have used it for something else, but you've wasted it in an attempt to attack the network. In proof of stake, the way that you attack the network is by staking more. And then if you fail to attack the network, you unstake it and you leave. So it doesn't cost you anything to unsuccessfully attack a proof of stake network, whereas to unsuccessfully attack a proof of work network, you lose something. The second problem is that proof of stake is less inclusive. Notice that I said you have to stake something, which means you have to get it. And the way that you can get Bitcoin is from the outside. You can buy a piece of hardware and start mining Bitcoin and then get Bitcoin as a reward for doing your mining. You don't have to start off with any Bitcoin in order to start mining. If you want to stake something in a proof of stake network to start getting rewards, you have to already have it. So there's no way to get into that loop other than by acquiring it in some other way, like buying it. So the way to start proof of stake mining, or whatever you might want to call it, is by buying some of the asset from someone. And that's not as inclusive as Bitcoin. The third problem is that it's probably impossible to transition Bitcoin to proof of stake. Andrew mentioned nodes and talked about the vast node network. So what it takes is convincing an appreciable fraction of those Bitcoin nodes to switch the software that they're running on their computer to a different consensus mechanism. And that's a tall order. You have to go individually or somehow collectively and convince them of that. And as Craig talked about with the monetary policy, Bitcoin changes very slowly, if at all. And so it would take a concerted effort, a long time, and just probably unlikely to happen. The fourth problem with transitioning to proof of stake, which I hope the mining panel will talk about, is that switching to proof of stake would not allow Bitcoin to play the role in the energy grid that it's beginning to play as a buyer of last resort, as a demand response, and things like that. So I don't know as much about that. I won't get into it, but that's a little carrot dangling for the next panel.
Yeah, I think I saw Troy Cross here and others, so we'll certainly be hearing more about that, which I'm looking forward to. Turning to Bitcoin as a monetary network. So we talked about this kind of vaguely, but if you think of Bitcoin as a monetary network, there's the monetary network side of it's a payment system, and then there's also Bitcoin the token, which people are treating as a money, so it's a monetary network in that way as well. Josh, one of the key ideas when talking about monetary networks is this idea of network effects. What are network effects and how do they apply to Bitcoin as money? And what does this mean in terms of this idea of neutrality and even from a policy standpoint, what could this mean?
Yeah, so when it comes to network effects, essentially any money that exists requires some kind of network effect. Because if I'm going to take $1, why would I accept $1? Well, because I expect other people to accept the dollar. And so the more people that I expect are going to accept $1, then the more likely it is that I will accept that dollar. The same is true of euros, the same is true of Bitcoin. And so that network effect is crucial because without that network effect, essentially no one is using it, right? You need to generate this network effect. And if we compare this to other projects, like we kind of started this panel by contrasting it with other cryptocurrency. I think there's a recognition of this. If you look at a lot of these other cryptocurrency projects, they're designed to try to bootstrap some kind of network effect, right? Oh, you have to use, you have to use this. If you want to use these apps, like you got to use, our cryptocurrency or something like that. But Bitcoin does this in the real world, right? So the value of decentralization is important, especially to people who need money in places where it's hard to send money back and forth. Bradley just mentioned, there are network effects that are coming from, sort of balancing the grid. And so there's real world applications that create this network effect because you have people who are getting involved in Bitcoin who might not have been interested in it otherwise. But this increases participation in the network, and by increasing participation in the network, it's generating that network effect. And so, network effects are important. I mean, part of what we're kind of doing here is kind of selling why this is so different, and in doing so, we might be creating some network effect, right? But it's important to realize that you can manufacture a network effect. If you look at social media companies, a lot of social media companies have harnessed a network effect, like MySpace. But then that network effect dissipates when people find a better alternative. And so I guess kind of like one of the things that I'm trying to stress here is that there is no better alternative. Bitcoin does what we need it to do. It solves the key problems that we need of an open and neutral monetary system.
So there is no better alternative. Now, when I first got into this, I'll admit, I was a tech analyst, an equity analyst covering tech companies. So I put on my tech hat and said, oh, Bitcoin's the first one to do this. It blazed the trail, but as technologies go, other people come in and clean up, right? So Craig, quick one for you here. Is Bitcoin likely to maintain its dominance, or is it going to be the MySpace to Facebook or the Alta Vista to Google?
Anything could happen. Nothing's a sure thing, but I tend to think that Bitcoin will keep its status as the leader of being a neutral money. That's what it's optimizing for. Nothing else is optimizing for that and has achieved it in the way that Bitcoin has. Other cryptocurrencies which have more utility and sometimes better marketing and handsome founders or whatever, they optimize for other things. Like, for example, I see Ethereum as a kind of decentralized JP Morgan. That's a good thing. It's good to have a more open and decentralized and permissionless JP Morgan, but such a thing wouldn't be or provide for a neutral money.
No, excellent. All right, so we're running close to the end here. I want to get in one on intellectual honesty. So I want to test your intellectual honesty as academics. What would have to happen to change your mind or for you to basically say, actually, I was wrong. Bitcoin is not different from all these other cryptocurrencies. And I'll open that up to whoever wants to take that. Who wants to put their reputation on the line?
I can think of one scenario. Imagine that some important player in Bitcoin had made a transaction, had acquired some Bitcoin, had sold some Bitcoin, and it turned out to be a bad move for them, a bad market move. And then they got the ledger reversed. They somehow turned back time and got the nodes and the miners to agree that it never happened. If that sort of network capture occurred over Bitcoin, and it ever really has, I would have to radically revise this thesis that Bitcoin is neutral. Then I would think, no, Bitcoin is captured, Bitcoin is not neutral, Bitcoin is not for everyone. Bitcoin is for those guys, the guys who managed to reverse the network because it was kind of unprofitable for them to run the way it was running. If that happened to Bitcoin, I think I'd give up. And you can hold me to that. 5 years' time, find me on Twitter. If this happens. So that I think would falsify our thesis that Bitcoin is neutral. It would show that, no, Bitcoin is not for everyone. Bitcoin is for those guys who managed to turn back time on a ledger.
All right, so to conclude out here, let's just go down the line rapid fire. 30-second elevator pitch. You're in the elevator with someone here or someone in DC, and maybe they're of the negative opinion that Bitcoin's not different. All these cryptocurrencies are the same. They're all scams, whatever. Or maybe they're on the other side where they're actually positive, but they have maybe more of the opinion I had at the beginning, which was, yeah, Bitcoin's great, but all these other things are better, or they're going to replace it. So I'll leave it up to you, but let's just go down the line here, starting with Bradley. If you had 30 seconds to convince someone why or how Bitcoin is different, or any other closing remarks you want to make, go ahead. We'll do 30 seconds each.
Wealth inequality is as bad as I've ever heard of it being, at least in the recent past. And I think that it's very important to have a money that structurally doesn't reward insiders, doesn't reward people who start off with a lot of it, and that is open and available to everyone, to the unbanked, to the underbanked. And I think along these dimensions, we can look at all the different cryptocurrencies. We can see what percentage of them is held by the people that have the most, what percentage is held by the people that have the least, what percentage of the total supply is held by the people at the top, the people at the bottom. These are the supply equity ratio and the network distribution factor. And along both of these dimensions, compared to every cryptocurrency that I've looked at, Bitcoin is 2 or 3 times more equitable than these other ones. And I think this lends support to the idea that Bitcoin is neutral money. And so for that reason, I think that we ought to support the Bitcoin network.
I think one important thing to mention is that Satoshi called this electronic cash. And if we think about cash, cash serves an important role because cash, unlike your checking account or something like that, it just requires the exchange of some physical object. And so there's a lot of privacy involved in that transaction. There's no third party that needs to verify this transaction. And Bitcoin is electronic cash. It allows you, the ability to exchange peer-to-peer with someone else without any third party being involved. It provides you, some level of privacy. Now the blockchain is publicly available, but it provides you some level of privacy in those transactions. But unlike any cash that has ever existed, going back to the ancient Greeks, you don't have to worry that this cash that you hold in your pocket will be debased and devalued over time. And so I think that we need to emphasize more this characteristic of electronic cash because it has all the benefits that physical cash has, but it has some additional benefits because you don't have to trust monetary policymakers or any government to be honest.
Excellent. Craig.
Yeah. According to the Human Rights Foundation, just over 50% of the world's population lives under a competitive or fully authoritarian regime. And if that's the case, then there's there should be, in my opinion, a demand for neutral money, a more private money, a money that can get around the censors. I think that Bitcoin and the dollar are symbiotic. So you have great price stability with the dollar. You don't have great price stability with Bitcoin. But what you get with Bitcoin in this trade-off is a more private, censorship-resistant money that's neutral money. Not everyone in the world has access to the dollar. And if they don't have access to the dollar and to this monetary price stability, then they can use Bitcoin. And so I think Bitcoin is important because it's neutral, and a lot of people need neutral money.
All right. And Andrew, 10 seconds.
Anybody remember the 90s? AOL, CompuServe? Yeah? These things were great. They were run by one firm each. They're little walled gardens. Crypto projects are AOL. Bitcoin is the internet.
Excellent. Thank you so much.